advocate of small businesses. And guess who's the big fan of clean tech, clean energy sector? Obama, obviously. And we are in that mode. Banks think like that. We want to be in the limelight in the press, being in the eye of the politicians. So I truly believe that there's a huge opportunity for banks like us to go after this industry, but we need to understand it better and understand more. That's where I think you can play their role, really educating us, the traditional bankers, about the industry, how it can be profitable, walk through through the business plan, walk through detail how you can repay a loan back, how it can be profitable, and those are things that really helps us. I mean, we use a guideline called the Robert Morris Associates. I don't know if you're familiar with RMA guide. Bankers use that quite often. What it is that it's a survey. The company prepares this really thick book, and it surveys every industry, from CPA firms to candy stores by size. Under $500,000, $500,000 to million, over $10 million. Crunch the numbers for you. What is the income ratio? What's the net worth ratio? What is the typical COGS and net profit and all that? Well, for traditional businesses, we have a lot of information, but when it comes to clean energy sectors, we don't have historical data to compare to. So guess what? RMA associate data goes out the door, and that's where the opportunity lies, I think. You are the expert in this field. The more information you can provide, the data you can provide, concrete evidence, and present that information to us bankers, you're going to create the opportunity for yourself. And the money will be there, and we have the money. Does that answer your question?
Yeah, and I'm going to come back with another question on this, because I view you as both an investor potentially in a startup company, providing that debt capital to expand their business, as is the case with Lewis. But then the flip side is, if you're doing 100% financing with a 10-year note on solar for some other existing company that you know the business out of, right? It's the startup companies here that are trying to sell their technology to those firms to try to get those small businesses adopting clean tech. They're selling that product in that you might be financing for that customer to buy. So that may be another angle for the discussion. But I want to come back to you in a little bit. We're going to come down the line. So Don, your turn to give us your perspective on where the opportunity is. You mentioned solar being, solar seems like that's been solar PV. I take it, the 12 megawatts. Has been your kind of major kind of flavor for investment opportunity. Is that where you see the future? Over the next 5 years, is that where you see the investment dollars flowing, or where else do you see it in the clean tech space?
Well, it just happens that solar systems are sort of like the low-hanging fruits. It's not it wasn't decided that we want to stick by solar. I think there are opportunities in wind, there's opportunities in battery. There's opportunities in potentially storage, but the way we look at it is that how do we efficiently deploy our capital? And so the way we look at it is that here's where we are today. Here's the capital that we have. How can we go out and deploy our capital efficiently, and in a way that we're going to be able to get our money back. Now, in terms of solar projects, opportunities in financing, the way we see it is that, we're trying to get our bank to get into tax equity, because tax equity is one of the big payouts going to be. What I'm trying to do is to educate our bank to initially starting out smaller, maybe a couple megawatts, to do a few tax equity deals. There are opportunities for setting up tax equity funds. There are opportunities to set up sponsoring funds. And the concept of a sponsoring fund is in any particular, let's say, solar project, so you're looking at 2.5 megawatts or 10 million. If you have a good, solid, bankable project, it is highly likely that the tax equity portion is going to be about 40% of that, which is going to be 4 million. And if it's a solid, good economics type project, the term out portion that the senior loan is going to be able to come in is going to be about 40%. So that kind of that tells you that you need the other 20% sponsorship to come from somebody. And the way we look at it is that, let's say if I wanted to go out and set up a sponsoring fund of 100 million, you know, I might go out with just 10 million of our own money, and the 90 million could come from strategic investors, let's say equipment manufacturers that you're used to construct a solar project, you know, the inverters and whatnot. What happened is, you know, it's at a 20% sponsorship, 100 million, you can get $500 million worth of, you know, projects potentially deployed. You know, if you leverage on the pure equity and potentially sub-debt, and you have senior loan, and then combined with, you know, tax equity, you could deploy a lot of projects. And so your average cost of capital, you know, should significantly be lower. You know, hence, you know, you have higher returns on the investment. And so, but the challenge is, you know, you got to get the bank to the senior executive of the bank, and especially our executive committee to kind of go on and buy off. And so, I think in those areas, if you form a $500 million investment funds to invest into clean tech, I mean, that's going to be some serious opportunities right there. You know, hopefully that answers your
It is project finance in existing the technology is safe. It's a kind of centralized solar kind of deals. Correct. or centralized wind. This is what you and a lot of this tax equity opportunity is driven by the recent kind of tax credit extension, for instance, that we're seeing out of feds.
So the concept of tax equity investment's been here for a long time in the low-income housing type investments. You know, this is not the new thing. I think it's kind of new in that, you know, now that you use the kind of same old concept in low-income housing and you invest into, you know, clean energy projects. You brought up a very good point in that from our perspective, let's say we were going to go into a deal where we're going to be a tax equity investor. You know, all of the repayment sources have, you know, got to be identified, clearly identified where the repayment's going to come from. So really there's no reason why a developer or a banker or an investor should take technology risk. You know, the way we look at it is that technology risk should be taken by venture capital funds. And if somebody came to us with a new idea, with a new concept, you know, we do have access to those potential funds that we work with, so that they can kind of go in and, you know, the way we look at it is that from a lender or from a tax equity, see, the lender lends into a project with the expectation that the payment streams from selling electricity and any incentives thereof will be used to pay out the loan. A tax equity investor, how he or she gets the return on the investment is to kind of sit in and get tax write-offs. And so, you know, provided that you can't resell, you know, the project to a non-qualified buyer, so on and so forth. But the bottom line is the way we look at it is we don't want to take any technology risk in a lot of these projects.
And that's a good. I think that's a good segue to talking with Kerry on his perspective. But I'd also just kind of point out that this is one of the challenges in the clean tech space from a financing standpoint. If you look at the kind of valley of death, you see a lot of the early stage companies, the startup companies. And so there's some of the mechanical engineering folks out here thinking about starting in technology. The challenge with the clean tech space as a startup sector is that, you know, this stuff doesn't scale the way software does.
That's right.
So when venture capitalists look at these opportunities, if they're going to get to taking the technology risk off the table, that means they actually have to prove it out with a commercial scale demonstration project that they're likely not going to get debt financing to work on, right? So there's a lot more equity that's required in order to get a deal, get a company to that next level. So this is kind of a known problem in the clean tech space. And Gary, I wonder if you've got some perspective on that you can share, but then also, again, I want you to give us get out the crystal ball, which I know you brought with you, and tell us where are those opportunities both in the startup side and the equity side? Where should venture capitalists, where should the angels be putting their money?